Excuse me. Hello people. This morning there's been trades absolutely everywhere, but I realise, there was a question on Twitter about how do I ascertain the sorry, I forgot those arrows are on there, decide which 1, 2, 3 reversal, or which way the price is going to go. And I think it's important. There's two things that are important when you are open a chart, and especially if you're not that familiar with what I do. I think it's important to remember that all you have to do is look at, say for example, we always take our lead from the higher time frames, M1, M30, something like that, H1, M30. I call those the higher time frames because we're trading 5 minute. And if you want to look at an example of an old trade, best thing is look at an example of an old trade. That's what I mean. So you've got them all there, they're in front of you, and you can then start to analyze from the higher time frames, just anywhere. Pick a random example, and let's we're looking at this M30 chart to look for something that might be a reversal. Now as you look at this, you can see we're oversold, same as we've got over here. Not such a good example, so maybe that's a better example to use as our random example. So you're oversold, and this one wasn't particularly good because it's not a huge distance between the red and the green bar, whereas this one is, and as you can see, price is absolutely blasted. This one's slightly different, so we'll use this example and see what exactly did happen in there. So we can look at that 30-minute bar. We drop down a couple of time frames, go down the 5 minute first, and we can see what's happening in that 5 minute chart there, 15 minutes rather. And what we can do also is we can see this is a big move down, and we can also draw a 15-minute 3 candle reversal, which is the high of that one there. Excuse me. So now we have devised a plan. We can see clearly that and also I should mention the 30-minute wouldn't have happened till after our 50-minute. That's why the 30-minute, there's the new bar there, and as it happens the 30-minute gave us a break and close on the RSI, and they are strong, these things. So that cable move there was best part of 9 or 10 pips net of spread, excluding spread, so take roughly 2 off of that, so 7 pip move. So, and you could have worked out where that was going by drawing your support and resistance over there. So potentially valid trade there. But as I've said before, when we're looking at these reversals back to the hourly ATMA, we really only want to wait for a 15-minute. So we look at the 15-minute, and then we could check what the 30-minute is doing. And the 30-minute, I guarantee you, that 30-minute bar would have been green and well up away from the red. So we've got an indication that we're losing the momentum to the downside and gathering momentum to the upside. So we're using all the charts to our advantage, all the time frames. So we are watching the 30-minute. We have observed the 15-minute has closed, and it's done the old oversold big red to green disparity. We've done a 3 candle reversal, so now we can drop to the 5 minute, and we can potentially find a trade there. And here's the good old die hard. That was the whole point of this video, really, to show the simplicity. Once we can do this song low, high, higher, low, once that high is broken by price here, this is a valid connection point. Doesn't matter if it's closed or not at that point, because this is where momentum takes over, especially as we can see this 15-minute box here is a breakout strategy from Billy TT on Forex Factory, but you need to go there for the rules for that. Very, very straightforward, and it has about 63% win rate for him. He doesn't use any of these other indicators, so I imagine his win rate would go up fantastically if he added something like the RSI and the 3-candle reversal. Anyway, that's why I've got it on there, because I do that. I don't wait for the breakout, I just trade it, knowing that's the 15-minute London Open, knowing it's got a 63% win rate without the additional check boxes that we have. So anyway, back to this particular trade. Sorry for digressing there, but there's your bust, there's your pullback, there's your break and close, and there was a perfectly good, it was the open of this new candle. That's where you start. So 6 pip drawdown, 18 pip potential move. So that's that. But the point I'm trying to make is, if you are fuzzy in the morning, just find an old example and then you can work out how it works. Give your time, yourself an hour before the start of the markets, and there it is. Keep it simple. So then when you come back to the current time of day, none of this has happened, you can start to think, yep, I've got an ascending trend line and a 5-minute chart. Now what do I need to have? Well, I need to have some sort of change of momentum from long to short, where you've got that there. I need to have a 15-minute reversal, well, that's there. This isn't overbought momentum, but we're not so worried about that, because it's the time of day. We know we know the main trend is down, a massive downtrend, so you wouldn't really want to be, they've done all the accumulation. This is what this whole upwards ascending trend line is. It's where they kept pushing it up, faking in the long traders and getting orders at a discount, if you like, selling the price so it moves up. What happens when you sell? Price goes up. And because the buyers are moving into the market, so they're selling their own money to push the price up, faking the long traders. That's the way I look at it anyway. It might not be true, but who cares? And then ultimately you get this pattern that repeats itself time and time again. Over here, same thing happened. Force the price up until they reverse it. There's the bust down, there's the pullback, there's the break and close, there's the 3-candle reversal. 3-candle reversal is hiding behind here, so that's tick box 2. Ascending 5-minute trend line, 3-candle 15-minute reversal, high momentum move. Then check your 5-minute for your bust, pullback, break and close. Got to have a downtrend that I talked about earlier on. High, low. Once that low's broken, after this is pulled back, we're good to go for a low, for a short move, providing you can tick this box and providing you can tick that box, and then you just look for a valid target. The point, we've got an S1 down there. That was, if I remember correctly, about 35 pips away from potential entry there, and there you go. So if you're a bit fuzzy, go and look at an old example, brush up on your rules, as it were, then just draw a line and wait for all your boxes, your ducks in a row, your Russian dolls, all your boxes to tick. Hopefully that helps. Try and keep it simple as possible, guys. We're still always using the 3-candle reversals. We're still always using the RSI. Both things almost always happen at the same time, and we're still using trend analysis. Okay, higher lows making higher highs, lower highs and lower lows. Okay, thanks for watching. Have a good day.